everyone, good morning. I'm Kate Rogers from CNBC. Thank you, Kelly, for that warm welcome. So we have a great panel here lined up about traditional lending versus alternative lending and what's right for your business. So first here we have Brett Barris. Brett is the co-founder and president of Credibility Capital, which was founded in 2013. This is a marketplace lender focused solely on small businesses. Their product is not yet available, but they hope to have it to market in the next 6 months or so. So thank you, Brett, for being here. Next up, we have Gustavo Perez. He's manager of lending for New York and New Jersey at Accion. He's helped hundreds of small business owners with their financial education and access to capital. And Accion's a nonprofit offering microfinance solutions, investing, education, and training. Next to him, we have Martha Sofer. As Kelly just introduced earlier, she's from the U.S. Small Business Administration's New York office. They help small business owners with their business plans, one-on-one counseling, government contracting programs, and they're working with community-based economic development organizations in Manhattan. Next to Martha, we have Benny Ederson. She's founder of Benny Day Services. She started her company, Home Improvement and Light Construction, in 2011 and received a loan through Accion in 2013. She's an active member in the New York community, giving back through construction projects, subsidized housing, and more. Next to Benny, we have Ralph Mbaka. He's Senior Vice President at TD Bank. He's a senior banker in the city market, and he leads small business and commercial banking efforts. Next to him, we have Paul Krish, SVP of Market Credit, SVP and Market Credit Executive of Long Island in business banking at Capital One. He's got more than 29 years experience in banking at Capital One, Bank of America, and Bank of New York. And then we have Erin Fairbanks, Heritage Food there on the end. She's worked at the Savoy Kitchen, Gramercy Tavern, Flying Pigs Farm, and today she works at Heritage Foods in Brooklyn, and she also launched the No Goat Left Behind national project for them. So thank you all for being here. And we can get started. All right, so I'd like to start off here with Brett, who can tell us a little bit more about marketplace lending, the difference between that and traditional lending, why it's emerged on the scene,
Sure.
what it means for your business.
Sure, happy to talk about that. Thank you, Kate, appreciate it. Marketplace lending, just as a real simplified version of it, it's really just a platform that brings together borrowers and lenders. That's really all it is. It's mostly done online, and it's a way for borrowers to meet lenders and to come together. The borrowers could be small businesses like many of you fine folks out here. It could be consumers that are looking to refinance their credit cards. It could be students that are looking to refinance their student loans. It could be people even looking to refinance their mortgages. So a big group of prospective borrowers out there. And the lenders are really yield-seeking investors that are looking for a new product. The industry started out as many individuals, high net worth individuals, family offices that were looking for yield. They were looking for new securities. But the latest iteration is really many larger institutions are playing in this space. Many hedge funds looking for new products, even insurance companies, and even banks are now starting to play. So it's really marketplace lending is the place that everybody comes together, and the lenders find the borrowers and vice versa.
And so for our more traditional lenders on the panel, Paul and Ralph, I'm curious to hear how you feel marketplace lending fits in with your banks and what you see the future of it as being.
Sure. I think it's an important component. Competition is a good thing. So we welcome it. We're used to it here being in New York. I think we're certainly used to competition. And really having that dialogue, really having that discussion around getting access to the entrepreneur, to the business owners is critical in that. What shouldn't be lost in this is that dialogue, is that discussion with bankers in your community. And that, from a traditional perspective, is very important to me. We want to make sure you're having that access to trusted advisors to ensure that you're having a robust dialogue of where you want to take your company. What's your plans? What do you want to do? And how can financing help get you there?
Yeah, and it all depends where you are in your business cycle. If you're, just starting up, or if you're like Erin, 10 years in business with health foods. So there's a spot kind of for everybody, and it's just kind of where you fit in. If it's senior, more traditional like Ralph and myself, or sometimes as a startup with SBA or with the marketplace there.
And so traditional banks are working with Accion and Gustavo. If you can talk a little bit about the work that you do there, maybe how that's different from marketplace lending and how you're working with banks.
Sure. So Accion is a microfinance organization, which means essentially providing small business capital from $500 to $50,000 to small business owners. So microfinance organizations, a majority of them in the U.S. being nonprofits, work with the banks essentially in terms of a second look program. So because we know there's this huge financing space, because we know borrowers are in different stages of development, whether it's credit-wise, startup phase, or other, we work with them essentially to support the business owner in the financial education they need, the capital they need, so that then they can graduate to the bank. So I think like you see here, people there's a spectrum, a continuum of financing essentially. And it's all helping the entrepreneur at the different stages that they're in. And all of us have a role to play in that healthy capital lending marketplace.
I think a lot of the stigma that surrounds marketplace lending too is that you need that cash right now. And maybe you're not thinking as far in the future as you would be with a traditional loan from a bank like TD or Capital One. Ralph, you said that maybe in the future you'll see marketplace lenders working with you to help create financial services. They will need to think bigger picture and longer term. Can you talk a bit about that?
Yeah, I think you're going to see the need for filling that space of that initial startup capital, and I think that's an integral part of that, and that can kind of take you to that next level where then traditional financing would become more important for the future growth of the company. So really kind of a step process, and I think everyone here on the panel really offers different entry points into that, whether it's through the SBA or through the local EDC here in New York City, or the business solution centers that we have. I think those are all important components that'll springboard you into the opportunity of going into a more traditional financing or mixing and matching of what you need from a financing capability. It's just not, we have the luxury of just not one option.
So Martha, the SBA did $19 billion with a B in small business loans this year. Can you talk a bit about what you're seeing trend-wise among the people who are coming to you and seeking capital?
Well, lending is definitely up. It's up 14% nationwide overall. Happy to report that among some ethnic minorities it's even higher. It's up 36% among African Americans. And 14% among Hispanics, and 14% among women. So this is a good indication that our economy is growing, it's strong. The SBA, we don't make loans directly. We guarantee many of the loans that the banks make. By guaranteeing, that means if you as the business owner cannot repay the loan, the SBA pays up to 85% of that loan back to the bank. This encourages the lenders to make loans, especially to startups and to high-risk people. There's a misconception that the SBA does not loan to startups, but in reality, about approximately a third of all of our loans actually go to startups. You may only need a few $1,000s. We work with micro-lenders. Accion is one of our micro-lenders. Micro-lending is like under $35,000, and it tends to be community-based, or a larger amount of loans. Our financing programs go as high as $5 million. And like Kelly had said at the very beginning, the SBA is having a sale. Our main loan fund is called the 7A loan fund. And any loans up to $150,000, the fees have been waived. If you're a veteran, it goes up to $350,000. And from $350,000 to $5 million, which is our cap, for veterans, the fee has been halved, right? So this, you save thousands of dollars if you're going for the big loans. These small loans, since we've had our sale, it was all last year, and it's this year, those loans of $150,000 and below have been up 36%. So this is great because small businesses, two out of 3 jobs come from small businesses. So
that's what we like to hear, and we have some entrepreneurs on the panel. So Benny and Erin, I want to talk to you about what made you feel ready to take out a loan. And Benny, we can start with you. You got a loan from Accion. Can you talk about what made you feel ready to invest and expand your business?
Oh, well, at the time I had won a bid and I needed insurance. I had insurance, but when I won the bid from a general contractor to be a subcontractor, the insurance that I had, they didn't accept it. So, you know, he gave me like a week. He was like, you have to get the proper insurance in order for you to do the bid. So I went to small business and they referred me to Accion. And it took 2 days. Accion gave me the money within 2 days.
I think that's a stigma too for small businesses when it comes to traditional loans. You think it will take you a really long time to get capital. And as Benny just described, her process was nice and short and sweet, so we like to hear that. Erin, can you talk about what made you feel ready to invest and expand in your business, why you took out a loan? And your loan was with TD, right?
Yeah, exactly. I'm sitting in front of actually Peter, our banker here. Hey. I think there was a demand for our product, and there was a moment in time where it was we needed to be able to expand the type of services that we're able to provide to both the chefs we work with and then our mail order customers. So just kind of in the natural evolution of the business, it was like time to take a next step. And through, I think, some stroke of luck, there was an introduction to Peter, and you know, I would never go to Peter and ask him to talk to me about 6 different types of rare breed pigs, because that's what I do. Yeah. But I would definitely go to him and say, like, hey, these are our needs. What's the right fit? What's the landscape? And can you help us negotiate that? And he was really awesome.
And had either of you attempted to get loans in the past? I'm curious to hear what your experience was like today, post-recession, post-financial crisis. That's a lot of what I hear anecdotally from small business owners, that they feel that the lending standards are tighter now. It's harder for them to get access to capital. Did either of you have an experience to compare it to?
No, I think the investment in our business has always been like a result of personal relationships. So kind of in the past, when there was a need for additional funds, it was, you know, person-to-person lending, people who believed in the kind of mission of our business and wanted to be a part of it. So I think this represented a little bit of a transition, but really along the same line, like having a person in a banking standpoint who is empowered to like make decisions, be flexible with us, give us the information we needed. It was kind of exactly the same as what we've been doing other times in the business, but just not with bankers before, because they weren't in our network. They weren't the people we thought of. And I don't even know like why that was. It just wasn't the kind of culture of the business.
And I don't think that that's a unique experience. I think that that's something that a lot of, Ralph, you look like you want to jump in. I think that's something a lot of small businesses feel. It's out of their network, or they don't have access to that.
Well, that's why the retail network is so important. That kind of ability to have the resources within the community to go into and kind of start a discussion and meet bankers like Peter and be able to express your plan and your mission and really make that connection as far as understanding where you want to kind of take the company or what you need to do at that immediate moment. And maybe what you say is not exactly clear in your head of where you're trying to take it, but through that dialogue, we'll kind of work together and decipher what those next steps are and what those components of bringing it all together. And that's really critical.
Gustavo or Martha, were you going to jump in?
I'm going to say another way to have that dialogue is to come to one of our resource partners. We have SCORE, who's back there in the corner, Small Business Development Centers and Women's Business Centers, because they have the relationships with all the lenders. They know all of these guys and ladies. So they would know, they would analyze your project, they'll help you develop a business plan for free, and then they'll introduce you to the appropriate lender. So that's another way. You could go directly to the lenders or come to the SBA and we'll guide you. And that increases, that statistics show that your likelihood of getting the loan is increased, as what happened right here. She was referred by one of our SBA resource partners to Accion.
And I think one commonality that you'll find throughout the lending landscape is really the importance of character. And I think this is something that a lot of people forget about. They think about the capacity to repay, right? Their cash flow, they think about credit, they think about collateral, essentially the 5 C's, but character is so important. So really establishing a relationship with your banker Understanding the lending landscape and who is there to serve you at your specific stage, but also really knowing your business, knowing your loan request. You know, what do you want? What do you need, and where is it going to propel you to? Establishing the relationship with these individuals in finance is extremely important and can play a huge role in that loan decision. So does your banker know you for 2 years, or did he meet you a month ago, right? Many times when they're communicating your story to a credit committee or an underwriting department, the fact that they know you and they know your business and they can vouch for that is extremely powerful. And I think even more so when you are working with the non-traditional lenders, right? So when you have damaged credit or when you don't have all of those perfect pieces, really being a person of strong character who knows their business, who's established a relationship, is so important in that story and can really propel you to that loan approval that you need. So I really always encourage people to not underscore that C, because I feel like it always is the one that people forget about.
That's a great point. And so, Brett, for Credibility Capital, what types of criteria will you be looking for to lend?
Just to put on,
go for it.
just to bring it back. So our convenience is, you know, we don't have the bank branches, and we're not going to have the bank branches. We don't have that real hand-holding that for many customers is very important, and I'm not belittling that at all. But our convenience that we offer is that many small business owners or whoever wants to borrow through marketplace lending can go online and at 10, 11 o'clock at night they could submit a short application. They could get an automated underwriting process started right away, and they can get a very quick decision. So it's a different type of convenience, and we're targeting a different part of the market because we're really for businesses that are looking for under $150,000. So because we don't have the bricks and mortar, because we don't have the real heavy hand-holding, we're able to offer a different type of product, and we just don't have that overhead that many banks have.
What's your interest rate structure going to be like?
Sure. So what we tell borrowers, if you have the time and you qualify and you're large enough, we can compete with the banks. We're not going to be as low APR as the banks, and that's just the reality of it. But on the other hand, we're going to be much better than the alternatives. We're going to be better than a credit card rate. We're going to fall sort of in between that gap between a bank rate and a credit card rate is really where we like to price our loans.
Go for it.
Just one thing with the partnerships between the SBA and the micro lenders and the banks don't necessarily have to have the loan. They could have the deposit relationship where we do have the brick and mortar, and you come in for maybe a home loan or just deposit a checking account, a business checking account, a business savings account, or a corporate credit card. And we work in hand kind of with the SBA and Axion because we know, again, they're taking care of your needs today, and maybe in 3 years or 5 years or 10 years, maybe you become kind of bankable with the senior lenders like ourselves. So we have to work in kind of partnerships with them, and it makes for a good business because you get both the trusted advisor, the value added of the bank, and also of the small business lenders like SBA and Axion.
I'm curious, among the traditional lenders, we just mentioned interest rates. At CNBC, we just recently did a story on low interest rates, and they're not necessarily sparking this huge rush for people applying for capital in the way that you would think. Do you feel small business owners are in tune with interest rates being historically low? Do they care? Is it not a consideration for them?
I think some are taking advantage of it, either if they own a property, refinancing. But I think people are still cautious of kind of where the economy's headed and where healthcare is headed and how that's going to affect them. So they're still like, do I hire that next person? Or can I stretch the people that work for me today because I don't know if the economy is going to take a second dip and have another recession?
Martha, were you going to jump in?
Well, yes, no, I agree with what he just said. And also, I think that's the main thing. It's fear of where the economy is going, the healthcare, the same thing. But hopefully, maybe there'll be more confidence now. We've just had elections, and GOP usually translates into better statistics for the economy and more lending. So hopefully, like I said, our lending is like off the charts as far as last year. So people are still willing to take the risk, and start the business. And I think now is the perfect time to start.
Benny and Erin, I'm curious what your concerns are, what considerations you take before hiring that next person or expanding. Benny, do you want to start?
Well, I hire people as, when I get jobs as I need them. So, and as far as me, I'm in the process now, I'm going to work with Axion now to, engage in another loan. But everyone is still kind of scared. If you borrow and jobs slow up and you don't get the work, you're still liable to pay back that loan. So
exactly. And Erin, were you going to say something?
Oh, I mean, I guess I don't really follow the interest rates because I'm running a business, and that's not my business. And I think small business owners, it's like you're passionate about your business and your product or the services that you're providing. And that's where 99.9% of your energy goes. And I think small business owners are, in general, like kind of optimistic. That's why they're doing it, because they want to be in charge and they have an idea that they believe in and they're pursuing that. So they're, maybe that's sometimes blindly optimistic.
As they should be, which we want them to be.
And, they're like the tolerance for risk. I'm not like looking at a spreadsheet of like projections and figuring out like, well, I'm like, what's happening today? What's happening in the next couple of months? We're a seasonal business too. Obviously, in the holiday times, right now we're like literally in the midst of our selling 7,000 rare breed heritage turkeys, and our founder is off in Kansas packing turkeys, which is why he's not here today. And so when we decide to bring somebody new onto the team, we're kind of hedging our bets. It's usually we meet somebody who's going to be a great fit for us, and we want to make a spot. Because that's like, I think the other thing that small business people want to, you want to create opportunity for folks in your community, and you have someone kind of come across your sphere who's just awesome.
Yeah.
You want to figure out a way to make it work, and you kind of go. And sometimes you get burned, but sometimes you just like, you jump over that little bit of a hurdle, and that person brings all these new resources and all this new energy into your business, and it's like such a win-win.
Ralph, were you going to say something?
So that's really critical. How do we take an entrepreneur, a small business, and get them to the next level? And that's really critical for us every day, and how we approach it from a banking perspective. So really working collaboratively, working with our clients to kind of get you through that process of whether hiring a new one. Is the interest rate environment something that I should be taking advantage of? What is my access to capital? Those are all important components that we really need to explore if we're going to be successful here in the New York City market of taking these small businesses, the 1, 2, 3 employee shops, and getting them to that 25, 50. The more job creation that we have, the more we can really look back and see the success in our communities.
And I think it's a really important question because as we've observed the past 2 years, clients aren't really as rate sensitive as they used to be. So the concern now is I want things quick and easy.
Yes.
And
hence marketplace lending.
Right. Yes. I want things quick and easy because they're so focused on their business and they're the lifeline of their business and they don't necessarily have the time. And it's also about the amount, right?
Yes.
And so I think people are willing to accept different thresholds of interest rates when they can get those two things. And sometimes my concern is that the online lending space has grown very dramatically, and in that online lending space, there are what I call healthy lenders and unhealthy lenders. And so the merchant cash advance world, especially in that online space, has
Can you define that for the audience in case you're not familiar?
So these are the lenders, not to call out by name, but essentially that are providing a loan based on your merchant cash sales, right? So they're going to give you a $20,000 loan based on the volume of your merchant sales. This is an unregulated space because it technically isn't a loan, a term loan. And so what happens is that these loans are approved very quick and easy, and maybe for an amount that you are looking for, but there isn't a verification always of the net income. So can this person remake and repay that loan, right? What is the impact on that business and the bottom line? And so many times these loans are in the 40% range to 400% range, and the way that they communicate the fees isn't necessarily always in a interest rate structure.
And to be clear, interest rates right now are at 0.25%, so a 400% interest rate is very, very high. I'm sure you have some thoughts on that.
Yeah, I would just say, along those lines, the way we look at rates is what kind of rate will satisfy our lenders. So as I went through the number of lenders that we had before, what kind of yield is attractive to them? So what are lenders doing now? A lot of the individual lenders are saying, do I want to leave my money in the bank and earn 25, 30 basis points? Do I want to put it in fixed income and earn a couple percent? So our industry as a whole, and one of the reasons why it's growing like weeds is because of this low interest rate environment, and because lenders are really willing to accept the market clearing rate is just very favorable for both the lender and the borrower.
Sure. Before we move on, Martha.
Also, you may not need a term loan. We're all talking about term loans primarily here.
That's a great point.
There's something called a line of credit, where it's a revolving line of credit, and it's particularly great for seasonal businesses, where you draw down the money as you need it, because you're anticipating you're going to, your accounts receivable will be coming in 1, 2, 3 months, 4 months. And you just pay the interest every month until you have your capital and principal, and you pay it back. As long as you pay it back within a year, the full amount, the principal, it's a revolving line of credit. So that's an option too. It doesn't have to be a term loan.
And if you have an established relationship with a bank, accessing a line of credit like that can potentially be easier. Like Erin, I interviewed your founder, and you guys have a $200,000 line of credit from TD Bank that you rely on because you're supporting agricultural families. So changes in the weather, things like that, they can really impact these guys. You need to pay them at the end of the day. And he said that accessing that line of credit is just easier for him. So he prefers to do that rather than take out a traditional loan.
Yeah, and I think especially when you're working in ag, we're selling the turkeys in, not to focus so much on turkeys, but in October, November, but our farmer needs to pay to raise them and house them and feed them and for the 9 months before they're ready for us. And so for us to be able to support him by paying not just when he can deliver, that is critical to his business functioning. And I think that's the other interesting thing, us having that flexibility to deal with the agriculture realities. We have, I think, probably 50 individuals where we're their primary source of income, and being able to pay them in a way that makes sense to the business, not necessarily when we get that product or when we get paid from our customer is the only thing that makes it work.
I'm curious from the lenders on the panel. You haven't started quite yet, so I'm not sure if you can jump in. And I'm sure the audience would like to know too, what are some of the biggest mistakes that you see entrepreneurs making when they're applying for loans or lines of credit? I know Gustavo brought up knowing your character and knowing about who you are as an entrepreneur can really sometimes help. What do you see them getting wrong, and what can our audience learn from that?
I think it's critical to have a plan. It doesn't have to be necessarily a formal plan or a well-written plan, but just an outline of where you are today, where do you see the obstacles that you're faced with, and how, and where you kind of want to go. And then in that dialogue, we can have whether a term loan is appropriate, whether a line of credit is appropriate. Are you looking for short-term financing or medium-term financing? I think that's really critical in not having an outline of where you kind of want to go and what you think the cash flows and what the demand to ramp up that cash flow is really placing on your business. So start there. That's important. Have your financial records in order. A good accounting advice is also very important. And you can have that conversation with your banker. I think for advice around that, are you getting the right accounting advice? And who can offer you that? So you can lean on a bank for that.
Paul, Martha, Gustavo, you want to jump in? Paul?
Yeah, to Ralph's point, cash flow is key, and just kind of understanding how you're getting paid, from your customers and how you have to pay, and kind of matching that up. Numerous times people come in and say, how much can you lend me? Instead of, I need X. Right. And we got to kind of work backwards and say, okay, this is how much your sales are, this is how much you're making today, this is how quickly you have to pay your workers or pay your vendors, and we work backwards to kind of reach a number. It's much more helpful when the business owner understands month to month, how much am I going to need? Is a $50,000 loan going to be sufficient? Or that might be too much, I might only need $25,000. And again, you want to grow into your loan as opposed to go for the biggest loan you can get and maybe get declined, as opposed to maybe going for something a little smaller and working with that.
Do you see that often? People just going for the biggest amount of money that they can get?
I do.
They got to be feeling good about their business, so that's not a bad sign.
Like, how much can you lend me? As opposed to, I need $100,000 today. So when they have that understanding, and we can kind of help them kind of get to where they need to go.
Martha?
The number one reason for business failure in this country is not having enough money until your cash flow is positive and you're making a profit. Within 4 years, 1/3 of all businesses will have failed, and primarily not having enough money or additional proper planning. Often, business owners wait too long to go for the loan. They figure, I don't want any additional debt, and they're using their own money, and they find they get themselves in trouble. They may have ruined their credit because they're delaying getting the loan. My best advice is to get the loan as early as possible so that you have the cash to back up the reserves. We recommend, for those of you who are startups, that you have at least 6 months of cash reserves, because it takes, unless you're extremely lucky, like the little cafe that opened up around the corner where I live, it takes 6 months to a year to actually start seeing a profit.
Okay.
So don't wait too long to go for the loan.
And Brett, you wanted to say something?
Even though we're not in market yet, I would still like to give my opinion. So I would just say, know your product. It's something that Gustavo talked about a little bit, but in marketplace lending, there are many, many players out there with many different types of products. Mm-hmm. So just as an anecdote, my partners and I we did a little market research on who the players are within our space, what the product is, how much they charge, and what kind of APR that really translates to. And we had problems figuring out, going on the websites, figuring out how much a loan actually costs. So I would say, just because you borrow, you find a product and it looks like it's a 25% product, APR product. Well, that could be a 6-month product, and all of a sudden you're twice as much as what you think you're paying. So just generally knowing what you're paying, understanding the product. As you look at marketplace lending, there are many different players out there. As I mentioned, where we play in this sort of bank rate to credit card rate.
Yeah, midpoint.
That's where we play. But
not
there are
the
others.
400% interest rate.
Yeah, so we're looking for prime quality borrowers that are just not being served by the banks because either the loans, they're looking for smaller loans, or they just don't have the time. So I would just say know your product.
Okay. And then for Benny and Aaron, I'm curious, because you're on the ground, you're entrepreneurs, what are some of the bigger misconceptions around the lending environment right now out there that you've heard? Maybe that it's too difficult to get credit, traditional lenders aren't interested in you, things like that. Have you heard anything like that?
No, not really. I mean, I know a lot of small business, business owners that I know, they just don't go and apply. I think.
Do you know why that is?
I think more of just being scared that, they're going to get a no. So a lot of them might refinance their house, and just utilize their own money.
And Aaron, what do you think about that?
It's hard to figure out where to start. I mean, just sitting on the panel here, I've learned 4 new things I didn't even know.
That's great. That's the point.
But it's I think the barrier to entry is a little bit. It's kind of overwhelming. So unless you have that personal relationship or someone who's in your peer network or a colleague who can say hey, go talk to my guy, which is how we met Peter, who can kind of help you navigate that space. I think as an entrepreneur, it's just you've got a lot of stuff going on.
Yeah.
And
the turkeys.
Yeah, well, yeah. But, you know, I think about the other businesses that we interact with, and, you know, nobody, even if you have a business background, like, stuff is changing so rapidly. Things are popping up, things that didn't occur before, the language changes. I think there's like a bevy of options. I think, like, you go to the, you know, I go to Rite Aid or whatever, right, to buy deodorant. I don't need 300 choices.
Yeah.
I need like 3, or I need someone to, like, I need it narrowed. And I think, like, there's like some lack of clarity around, like, where do you, like, begin? And really the only place is like that person to person. So again, like that word of mouth, that reputation building.
That's a great point.
Help.
For sure. And, oh, Ralph, sorry. Martha, you're next. Ralph, what were you going to say?
Piggyback off of that, really, you know, a mentor. The local Chamber of Commerce is very key to really start to kind of break through some of those issues if someone is concerned about seeking or how to seek financing and so forth. I think are very critical. A mentor, an advisor, someone maybe not even in your field of what you're doing, and the local Chamber of Commerce is very critical for that too.
Martha, we'll take your point, and then I think we're going to start
I think the best place to start today while you're here to find that mentor and to find the advisor is to visit SCORE. And they're in the corner over there.
Great.
All right?
Great. Thank you so much.